Asian markets closed mixed today. The Nikkei share average ended the session up 1.3%. The Hang Seng Index declined by 0.41%, while the Shanghai Composite Index lost 0.11%. U.S. stocks advanced during Friday's session. However, the tech sector faced pressure as Nvidia dropped 3% and Alphabet slipped 1.2%, partly due to anti-competition concerns surrounding Google. Broader market gains were bolstered by a shift from technology into economically sensitive sectors such as financials, industrials and consumer discretionary. The Dow Jones Industrial Average rose by 0.9%. The S&P 500 gained 0.35%, while the Nasdaq Composite Index ended the session up 0.2%. The all-share index is slightly firmer, trading at 85,708 index points. That's up about 0.1%. The rand is trading at 18.04 against the US dollar, 22.69 vis-a-vis the British pound, and 18.93 against the euro. Looking at commodities, gold is trading at $2,671 and platinum at $946 per ounce, while Brent crude oil is trading at $74.88 a barrel. I'm joined by Gary Boyson. He's a portfolio manager at Rand Swiss. Thanks very much, Gary, for joining us. So what are likely to be the key drivers of markets this week? And I see that there seems to be some happiness among market players with Donald Trump's appointment of fund manager Scott Bessent as the next U.S. Treasury Secretary.
Yeah, certainly I think the appointment does ease some of the concerns around Trump's protectionism, although he does support higher taxes and at least tax cuts along with higher tariffs. So we'll see if that optimism lasts, certainly in the emerging markets. I think it is going to be a very mixed week for most markets because, of course, we have Black Friday coming up, which means that the US market's going to be closed on Thursday and they're going to get a half day on Friday as well, following the Thanksgiving holiday. At the moment, we are seeing the resource sector down a little bit, just down almost 1% at one point. Some of that is the just losses coming through from the gold price. We've seen a kick off the recent lows, but slightly negative today. The appointment, obviously, of Scott Bessent also, pulling the dollar index down a little bit. So dollar losing a little bit of ground too. I did see across in China, they've injected $124 billion into their banking system. This seems to be reiterating their commitment to financial stability, and that's certainly good for South Africa, as China is one of our largest trading partners. Later in the week, we've got the FOMC minutes on Tuesday. We've got a couple of inflation numbers out of the likes of Germany on Thursday, and then the EU, France, Italy will also release inflation figures on Friday. But I suspect it's going to be a quieter week for markets with the big guy out of them.
Yeah, so the oil price, you touched on resources. The oil price has edged up somewhat, but it's still below that $75 a barrel mark. Doesn't really seem to be that sensitive to what's going on in the Middle East as well as the Ukraine-Russia conflict. It seems as though markets just carry on as per normal.
Yeah, absolutely. I think you are definitely seeing concerns around supply disruptions as geopolitical tensions rise. The fact that Russia has fired a hypersonic missile, and that the Ukraine is now using British and US weapon systems, that is a major concern around supply disruption. I also see that Iran has activated advanced centrifuges for enriching uranium, which could potentially lead to more stringent sanctions from the Trump administration. Estimates are that could potentially take out 1 million barrels per day from the oil market. So I think that's the supply side of the equation, and that's why we're probably seeing it lift towards that $75 handle. But at the same time, the big consumers, China, obviously the top oil importer in the world, and India, which is the third largest, are showing significant demand. So at this stage, I think the demand from the big economies and the idea that we are going to see real growth coming from there is just keeping a lid on the price for now.
Yeah, and then related to that, what about Sasol? I mean, it seems to have lost a lot of ground. Its share price is hovering below 100 Rand a share. Has this stock lost its shareholder sweetheart status?
Well, I think it might have lost its shareholder sweetheart status quite some time ago. It's really been one-way traffic for Sasol recently. And while the oil price has been stable, Sasol has real challenges operationally. If you look at Secunda, it's obviously the coal to liquid plant. It's interesting to see how this is viable in a very green and ESG friendly future. It remains the world's largest endpoint emitter of carbon dioxide. Sasol it's systemically important for South Africa. I mean, it employs 28,000 people, but at the same time, it's in a very difficult position from a market point of view. And unless we see significantly higher oil prices and Sasol able to, I suppose, fix a lot of the operational challenges that it's had, I think the stock could potentially be under pressure for some time to come.
All right. On that not so great note, we'll leave it there, Gary. Thank you so much for your time and insights. As always, Gary Boyson is a portfolio manager at Rand Swiss.